Good morning. Here is today's Korean economic news briefing. We begin with significant developments in Korea's economic policy coordination. The country's top economic and monetary officials are meeting today for the first time, marking a critical moment as policymakers align their strategies in response to mounting global economic pressures. Vice Minister of Economy and Finance Gu Yun-chul is convening with newly inaugurated Bank of Korea Governor Shin Yun-song. This high-level meeting comes as the Korean economy faces a serious challenge from prolonged Middle Eastern conflicts, which are creating inflationary pressures across multiple sectors. Market participants are watching closely for coordinated policy messaging that can stabilize financial markets while managing price stability concerns. Governor Shin Yun-song, who formally took office on April 21, has signaled his commitment to pursuing both price and financial stability during his four-year tenure. The new central bank chief represents a pragmatic approach to monetary policy, suggesting he will coordinate effectively with the government's expansionary fiscal posture while maintaining the Bank of Korea's independence. This balanced stance is crucial as the nation navigates complex economic headwinds. In related developments, the Ministry of Economy and Finance is placing significant emphasis on artificial intelligence as a core national competitiveness factor. The ministry held a major AI companion forum for small and medium enterprises on April 21, drawing approximately 400 participants from public institutions and private companies. Vice Minister He Jang emphasized that Korea must expand its technological market into new AI domains to achieve higher growth levels. The government is now formalizing public-private cooperation frameworks and establishing one-on-one matching consultations between AI suppliers and certified public institutions. This strategic pivot toward AI-driven economic transformation reflects recognition that technological leadership will determine Korea's global economic standing in the coming decade. Turning to macroeconomic indicators, the situation regarding inflation is becoming increasingly alarming. The Producer Price Index released today shows the most significant monthly increase in 4 years. Matcha's producer prices surged 1.6% month-on-month, marking the highest rate since April 2022. Immediately following the Russian-Ukrainian war outbreak. On a year-over-year basis, prices jumped 4.1%, the steepest climb since February 2023. The culprit is unmistakably energy costs. Oil products have skyrocketed 31.9%, with naphtha prices climbing 68%. Officials note this is an unprecedented shock since the Asian financial crisis. The Middle East conflict's persistence is directly translating into domestic price pressures, creating serious headwinds for both consumers and manufacturers. This inflation reading underscores why the monetary and fiscal authorities are coordinating so urgently. Adding to concerns about policy direction is uncertainty emanating from the United States. The Bank of Korea's New York office issued an analysis today regarding Federal Reserve Chair nominee Kevin Warsh's recent Senate confirmation hearing. The analysis indicates that Warsh failed to articulate a clear position on interest rate policy direction, instead emphasizing the need for changes to the Fed's balance sheet reduction strategy and forward guidance protocols. This ambiguity has widened market interpretation of future monetary policy, creating additional uncertainty for global financial markets and Korean policymakers trying to anticipate American policy moves. On the domestic financial markets front, today's trading presented a mixed picture characteristic of current market dynamics. The Kospi index broke through the 6,400 level, establishing new all-time highs and extending its rally. However, the KOSDAQ index remained confined within its 1,100 to 1,200 trading range. Individual Korean investors are driving much of the Kospi strength, as deposit rates remain effectively 0%. Faced with such low savings returns, retail investors are increasingly moving funds from bank deposits into stock market positions, betting on market strength. Foreign institutional investors have reversed course and returned to net buying positions this month after months of aggressive selling, further supporting the KOSPI's advance. Meanwhile, exchange-traded funds maintain steady inflows, and additional weight inside capital continues entering the market. This divergence between the Kospi and KOSDAQ reflects selective market dynamics. The KOSPI's strength is underpinned by solid corporate earnings, foreign investor participation, and solid institutional support. However, smaller cap stocks represented in the KOSDAQ face more challenging conditions. In the real estate sector, premium branded apartments are experiencing dramatically higher subscription competition, with demand 5 times greater than general brand apartments. Supply-demand imbalances are most acute for high-end properties, while the broader market experiences affordability challenges. Seoul metropolitan area apartment presale prices have climbed 16.6% over the past year, reaching an average of 33.02 million won per 3.3 square meters in March. Industrial developments highlight Korea's strategic pivot toward advanced technology sectors. BMW Group has partnered with the University of Zagreb's Robotics Research Center to develop artificial intelligence-based battery cell manufacturing processes. Using AI to predict manufacturing parameters precisely, BMW has reduced prototype development time and resource requirements by more than half. Simultaneously, China's CATL has unveiled a sodium battery technology enabling electric vehicles to charge completely in just 6 minutes. These competitive developments highlight the stakes in battery technology competition. The government estimates that data center expansion and industrial electrification will require electricity generation equivalent to 18 large nuclear reactors by 2040. Currently, AI-related power consumption trends are not yet fully captured in baseline projections, but the surge is becoming evident. The Korea Hydro and Nuclear Power president emphasized today that nuclear energy represents the realistic solution for meeting these mushrooming electricity demands while maintaining environmental sustainability. Finally, regarding international factors affecting Korea, uncertainty over Iran negotiations and potential further Middle Eastern conflicts continue creating volatility. The Trump administration's messaging remains contradictory, with some statements suggesting peace progress while others appear confrontational. Meanwhile, Seoul's new high-end residential supply strategies and government restrictions limiting outside regional construction companies from certain projects are reshaping domestic investment patterns. For investors and ordinary viewers, several key takeaways emerge from today's news. First, coordination between fiscal and monetary authorities should help stabilize markets, but Middle Eastern inflation pressures remain a serious concern that could necessitate policy adjustments. Second, the Kospi strength primarily reflects large cap and technology stocks, while smaller companies face headwinds. Third, AI represents a genuinely transformative economic opportunity, but seizing this requires substantial investment in energy infrastructure and human capital. Finally, with deposit rates near 0%, retail investors face real incentives to pursue market-based returns, though volatility risks remain elevated. This concludes today's Korean Economic News Briefing.